Hi there. When a business is looking to expand into international markets, like IKEA has done over decades and businesses like Specsavers have too, what factors do they need to consider when they decide how attractive a particular international market is? A-level business students need to have an awareness of these factors, so what I've done is I've picked out 6 here which I think are worth adding to your notes. So it might be worth pausing the video as we go through these. I'll just deal with each of the 6 quite briefly. I think the key point to remember though is that a decision by a business to enter international markets is usually a complex one, particularly where they're setting up operations directly in the international market rather than just exporting. And there's always going to be some positive and some negative factors that need to be analysed and weighed up before the decision is made. Let's just work through the 6 factors listed on the slide here, starting with the one top left there, the size of the market and the growth of the market. Now, this is always going to be one of the most important factors. Does the size of the international market, the target market you want to enter, does it justify the investment? Does it justify the risk involved? And also, never mind the overall size, are there particular segments of the market that a business wants to target? And how large are they? How fast are they growing? Linked to that, the size and the growth of the market is always going to be linked to the economic conditions in the international market concerned. So this things like economic growth or GDP and the growth in the disposable income of consumers in each country, they're important indicators of the underlying strength and attractiveness of an international market. And as through our studies we take a look briefly at emerging economies. Emerging economies have proved to be attractive international markets because they've experienced faster rates of economic growth than developed economies. So the likes of Mexico and Chile and Malaysia have seen very fast economic growth compared with developed economies like the UK and the US. In turn, faster economic growth has also created emerging middle classes, people with rising disposable incomes, which in turn means that they can demand products and services of domestic as well as international businesses. So economic growth, disposable income, a key factor. Top right there, ease of doing business, the political environment. This is perhaps a more intangible but still an important factor. How reliable, for example, are the legal systems in the international market? Can the intellectual property of the business be protected? Is there a risk that the intellectual property might be lost? How volatile is the political environment? How often do the laws and regulations change? Does that make a market more or less attractive? Let's run through the stuff on the bottom line, the bottom row here, starting with exchange rates. And of course we study exchange rates in some detail in A-level business. Clearly, if we're going to be trading in international markets, then it's likely that we are going to be more exposed to changes in exchange rates, fluctuations up and down in the exchange rate compared with our domestic currency. For example, it may be that you earn profits in the international market, but a change in the exchange rate reduces the value of those profits if you want to send them back to the home country. Domestic competition is also a vital factor and an increasingly important factor, I think, particularly for attractive international markets, because the chances are that if a market, like Malaysia, like Mexico, like China, like Chile, has fast economic growth, it's likely that a business from the UK is going to have to compete against local or domestic competition. And similarly, those domestic competitors are also likely to have some advantages. They may be protected by their government, they may have control or better access to distribution channels, they may have a better understanding, likely to have a better understanding of customer needs and wants. So the strength of domestic competition is another key factor. And lastly, in our list of factors here, infrastructure. This is really all about the physical setup, the physical infrastructure of the market. It looks at areas such as transportation, into, out of, inside a country, the strength and the reliability of data systems, and for example the availability of broadband services. So there we go. Hopefully that's useful. That's just a list of 6 factors. There are others, but I've just listed 6 factors there that definitely influence how attractive an international market is to a business.